Welcome back, Alpha Hunters. Hope you had a great week. Let's figure out what is going on with the market. Definitely hope you had a great week hunting down that alpha, because I did not really have that great of a week. But, that's just kind of how it goes. Identify the opportunities that are presented and, take away the things that are not working and go into the things that are working, okay? What was kind of interesting as we kicked off this week, last Friday, we ended the week really pretty strong. Nice little starting to break out of the little channel that we had been in for the previous couple trading sessions. Well, really couple weeks of trading sessions. And we had an early week retest and then we continued higher. So let's go to a 15-minute intraday time frame here, and what we see is Monday, nice little gap up, kind of hang out for the first 15 minutes, pushed higher, very clearly continued from last Friday, and got out of that channel, right? We got out of that channel, and then really all we did was retest into those previous highs that we had over the previous few weeks, that we had, and then just kind of continued bullish, then carrying into Tuesday, and then Wednesday, and then the big one, Thursday morning. Thursday morning, we did get the CPI news that came out, and the market was looking for 6.5%, and we got 6.5%. So it came in line, and that was kind of the one where I felt like that was the most bullish scenario. I did, because I do feel like if inflation and CPI came down too hard, to me, that says we're steaming right into a recession, right? Because, if we don't have CPI or inflation is coming down too hard, that just means there's no demand, right? If there's no demand, then you just have a really weak economy. But we didn't see that. It came in line. The market kind of didn't know what to do too much. It sold off initially, and then it bounced, and then you had some snap arounds in the middle part of the trading session. And then we got to Friday morning earnings, right? Now we are to earnings season, and I know, and I'm going to talk here in a second, kind of what the bulls and bears are really kind of talking about, the narrative that you see them talking about. But Friday morning, we did get the start of a lot of major financial companies doing their earnings, like JP Morgan, Wells Fargo, Bank of America, Citigroup. And we had a nice little gap down on the market. And then you see that we, in the first hour, just bought right back up, basically almost neutral in that first hour. By the end of that first hour, went a little bit sideways then for much of the middle part of the day. And then as we got towards the end of the day, continued just to push higher, broke the weekly high over Thursday. Really over that last hour of trading, it was a pretty bullish week. And the question is, do we need to hop on? Do you want to hop on? So we're going to look at some things, some of the things that we were looking at this week on the live stream, just to try to figure out, like, where are we in the marketplace? Is right now a good time to kind of hop in, or do you want to maybe just sit on the sideline and wait and make the market prove to you of what it's going to do before you allocate into a bearish position or a bullish position? So let's just run through these major ETFs and kind of see where they're at roughly, because the SPY getting back into the middle part of the channel that it had back in the end of November, beginning of December, before the December CPI report came out. Then the Qs actually are retesting right into the bottom of that zone that it had set up. The IWM is basically at the top end of that zone that it had set up. So what you can see is we are seeing definitely here the DIA here getting kind of back towards those higher areas. So clearly we can see that we do have market leadership, and really a lot of it's coming from the small caps. The small caps and the IWM really been pushing pretty good here to the bull side. Now, a big part of that might be because, well, during the entire bear market, they are the ones that topped out first, right? The small caps kind of topped out first and started selling off before the S&P 500, before the NASDAQ. So maybe it makes sense that they maybe kind of lead us out of this to the bullish direction. So we'll have to continue to monitor that, see if that continues to play out. They might get a little extended here. That's the other thing, is a lot of the extension that we saw this week on the stock market is kind of one that, I don't really know if you want to be buying right now. You maybe want to wait for a little bit more of a pullback or a retest on some key support and resistance levels. And we'll talk a little bit more about that here later in the video. Let's just run through the VIX, dollar, and that kind of stuff, see what it did this week. Now if you are have any options positions kind of going on right now, one thing you did notice this week is the volatility in the value probably dropped off quite a bit and quite substantially, especially on Thursday and Friday, as we broke the 19 level that had been there as a pretty good support on the VIX for much of 2022, and it is no longer support in 2023. That's all we can say, right? We don't really know if that's the end, and now we are full steam ahead, full bullishness ahead. But we're going to look at something here in just a sec and look at maybe some comparables back in 2002 and 2008. But the VIX on Friday did get down to a low of 18.01. So kind of interesting to see the VIX drop off that much. And really that kind of says the market is a little bit complacent here. As we have seen a new low on the VIX, you would think that we would be seeing a new high on the market, especially compared to the December time period. But if we look at the S&P 500, SPY, we are not close to those highs that we set in back in December. So be a little bit cautious here. Make the market really prove to you one way or the other, whichever way you're leaning. Looking here at the 10 and 2-year inversion yield, one thing that would be kind of interesting to see, we're kind of talking about this today on the live stream, is if this thing just kind of hung out for much of January and then just snapped down, snagged this low that it put in back in December, and then started taking off back in the bullish direction, because it kind of seems like it wants to do that. It seems like it wants to come back down to that low, but it's also retesting this neckline that it had set in. Now, it had retested that neckline last week, later in the week last week. So maybe it turns and starts to move higher, or maybe it's just kind of later in January as it kind of continues to break down. It just snags down that low and then starts to push higher. But you have to think sometime here in the near future, we're going to start to see all these yield curves start to move back into the non-inverted area and start to move to the more normalized positive territory that they're used to being in, especially if you are bullish on the market. You would have already liked to have seen that already, but we haven't seen that. Now, a lot of people talking about VIX this week with the Thursday and Friday massive breakdown. The other one is gold. GLD gold futures just continuing to make its massive moves higher. Got a nice little 3-day side pattern here, Monday, Tuesday, Wednesday, and then Thursday, Friday, just a continuation push higher. This is one I would still really like to get in bullish, but I'm not going to touch it until we see some type of really more significant pullback, right? I don't want to be buying when it's already moving like this, just because there's too much room for it to possibly pull back to that. There's no real good spot to set up a stop loss. Okay, looking here at the XLU comparing to the SPX. So this is the utility ETF comparing it to the S&P 500 index. And the reason why I'm comparing this, because there was another channel out there that made this comparison. Now, I'm not trying to copy him, but what I'm going to do is kind of show off few little things. Okay, so when they were showing us off, this is how they were comparing it. They were comparing the XLU and the SPX. Now, there's one major problem with this. Okay, the XLU is an ETF that pays a dividend. The SPX is just an index that does not pay a dividend. Okay, so when you do not have adjust data for dividends, and you have that turned off or it's not highlighted, you have a chart that looks like this. And you have a very clear downtrend of these lower highs. And what you can see here, this is a monthly time frame going all the way back to 1998. That's probably when the XLU was first traded. You can see it's had a pretty good relationship, but it's been a lot more of a downtrend ever since 2008. And a big reason why is because the XLU just pays a dividend, right? The XLU just pays a dividend. Now, if you want to make a comparison between the XLU and the SPX, well, you need to normalize things, right? Because you are comparing a price on one and a price on the other. You're not comparing total value and total value, right? Because the XLU, as we all know, pays a lot of dividends out because it's a dividend type of ETF, because there are a lot of dividend stocks, right? So utility stocks typically do pay high dividends, higher dividend yields than many other stocks out there in the stock market. So this is not really comparing apples to apples here, or comparing things that you want to see. So what you would really want to do is turn on your adjusted data for dividends, and what you see is we have a very clear top here at around the 0.02 level. And really that's probably where you get market tops or so, or a good time to go from risk off to risk on type of situations. And we probably do see that, right here around 2016. That was a good time to go from risk off to risk on. Obviously, with the COVID crash that we had back in 2020, coming out of some iffy situations from the financial crash in 2011, and obviously the financial crash of 2008. But it is just something that I wanted to show off and say, hey, you need to make sure that you compare your analysis correctly, right? Because, one has dividends and one doesn't. So you weren't comparing correctly. So the XLU, you got to get the total value of the XLU, which you do that by turning on the adjust data for dividends button down in the lower right here. And then that's how you get that. Because another thing that they were kind of talking about is, what if we start to see a recorrection of this back to these higher levels? Well, if you see that correction or into these higher levels, well, if you actually adjust the data for dividends, where would that take that? Well, it would take it way off the map. Do you really think the XLU is going to get that much elevated over the SPX? I don't think so. I mean, I'm not a fortune teller, but it just doesn't seem like a good bet, in my opinion, to think that the XLU would get that much elevated over the SPX. Now, another way you could probably do this is take the XLU and compare it against the SPY. Might not be a bad way to do that. You obviously see here, I left the downtrend line there. Not bad. Left the adjusted for dividends also there. And yeah, there might be a little bit more of a normalizing period here if you get back to the top or the upper ends, or break this lower high downtrend. Maybe, who knows? Because this was mostly during the 2010s, bull market that we saw some of these lower highs on this trend line. So maybe, during this bear market, possibly we do see it go back into a little bit more elevated area. Don't really know. Maybe we see that here over the next couple of years. But while I'm here, let's just go ahead and talk about this real quick. So the XLU and the SPY relationship, what's really interesting to know here is it bottomed down here around where the market topped out at the beginning of last year, at the end of 2021. So this is kind of interesting. And we haven't even gotten back to this downward trending lower high line. So, is the XLU going to make a run back up to this line by the time we get to the end of this bear market? It's very much possible. And, in the next bull market, that like what we see coming out of 2002 going into, the great financial crash, we saw the XLU continue to make more of the ratio on the SPY back in that bull run. Maybe we do see a little bit more of that in this next bull run. Now, I'm not saying it's going to break this 0.3 level that we had up here, but, maybe it does make a little bit more of a normalized back to the 0.22 level or something like that later on, many years down the line. I don't know, but it is something just to kind of being mindful of, as, we might go on a value stock bull run on the market here. Anyways, this is just something I wanted to show you. Make sure when you are doing your analysis, you are comparing things correctly, because if you don't, you do get the wrong assumption about potential moves in the marketplace, and that is never a good thing. All right, so the next thing I want to kind of show off is we are looking at the ES, the S&P 500 futures, and one thing I want to look at here is the volume profile. And I want to look at the volume profile because I want to see where we have seen a lot of the volume traded on over the past, I don't know, several years. And I've already done this. It is kind of an interesting little feature to use. You can see how much volume has traded at different price levels. And really what you notice during a lot of this bull run that we've had from 2016, even through COVID, a lot of the upper ends of where we have traded over the past year, 2 years, since we broke the COVID high, really, I would say has been on some of the lower volume areas. Now, obviously we spent so much time there, we're starting to build up volume here, but the spot where we stopped back in October is one of the lower volume areas that we've had out of all of the areas out there in the marketplace. So it is just kind of an interesting note to see that. And the highest volume areas that we have are all the way back down here at around the 3,000 level, 3,100, 2,900. So, could we still make it down there? And then that's where we find all the volume that then winds up pushing us to go back into a bull market. It sure is. We've looked at this before on the live stream over the past couple of weeks. It was just kind of something neat to see, where the biggest volume profile is ever since we broke out back in 2016 on the marketplace. Because if the market's going to push to anywhere, it's going to push to an area where there's a lot of volume, where it can pick up a lot of volume. And then that is where it is going to find a bottom and then continue on higher. So it is a little weird that we stopped where we did back in October, and that's the lowest volume area that we've traded out of all of the area here. Just something to be mindful of and something to watch, possibly as, if we do get back down to the 3,500 level, as we get back down to the October lows, might just have a nice little move down to 3,000. Don't know, but that would be a pretty good area. As there has been a lot of volume that has traded there before. Okay, so I got here the SPX, and that's the bar chart that you see here. The orange line that you see here that goes up and down, this is the VIX, and this gray horizontal line that you see down here, this is at the 18 level on the VIX. And one of the reasons why this is there, just to kind of know where we got to this week on the VIX, right? Because we got to 18.01 as the low on the VIX on Friday. And what we've mostly been watching on the VIX over the past year, especially in 2022, is anytime it kind of got down to about 19, that is when we saw tops in markets, and that's when we saw market rollover. This wound up becoming too obvious, as a lot of people could see it, right? Everybody could see that, the 19 level was just a little too obvious. And it seemed like if we broke that, then, hey, the bulls are in charge, and let's just go bullish. Well, one of the things that I wanted to do today on the live stream, that was kind of one of the things that we did, was we went back and looked, and were there periods of time where we got down to an 18 level and then broke down on the S&P 500? And back in the 2000 to 2002 bear market, what we can see is, we had periods of constant elevation between the 20 to 30 level on the VIX. And this was as like the market was normally just chopping down. Then we got a pretty good spike here on the VIX. And this one was from 9/11. This is September of 2001. So that was 9/11. And then, we had the VIX kind of just continue to drop off. And what we see here is the VIX actually gets below that 18 level. It gets down to that 18 level twice. It gets down right here. So basically right here in this little 2-week little bull run that we had. And then also here on this one little weak pop that we had later on. So what's kind of interesting to know here is this was not the top of this whole little rollover that we had, okay? The top of this rollover was right here that we put in back in December and January of 01, 02, okay? That December 01, January 02, that New Year's, that is when we actually put in this little top of this whole little rounded mound here. And so we see a kind of a similar situation where we got some consolidation here for a few weeks, some lower wicks here. And then we had a 2-week little rally. Then we had a hangout week. And then we had the market start to sell off or trade lower. And that was kind of about the same time that the VIX was dropping below 18. Okay. So we got to a VIX down at the lower 18s this week. And if over the next couple of weeks we continue to kind of trade lower and maybe the VIX gets below 18 or something like that, it's still not all clear to be bullish, as we need to see the market kind of overtake some levels. But just because the VIX gets to an 18 level doesn't mean we aren't about to go into a major sell-off on the marketplace. And about the timeline for this to happen was back then was March 02 to July of '02. So about 3 months it took to go from this little peak here down to the trough that it put in July, and to really get that VIX spiked up there. Now looking at the SPX during the '07 to 2009 bear market, we can see it kind of happened again right here at this little hump. Right before we go into some major market sell-offs, we did breach 18 to the lower side on the VIX, and then we started to see, that was when we started to see the rollover happen for a few weeks. So basically, just kind of understanding that we need to see a couple more weeks. What's going to happen over the next couple of weeks is kind of very telltale on potentially kind of how we want to position in the marketplace. Do we want to set up bullish? I think we need to take out some more levels in the bullish direction. Just because the VIX came down as much as it did this week doesn't mean it's all clear and it's time to go bullish, because we saw in the two previous bear markets that we did see a lower VIX around the 18, or even a breach below 18, and then the market went lower. And that was when we went into major market sell-offs. So looking here at our current place in time, you can see that we had a little bit of consolidation for the 2 weeks to end December. Then we kind of popped out of it early January last week, basically. Continuation higher this week, but we saw the VIX drop off. It didn't get below 18. It kind of got down. The lowest point it got for Friday was 18.01, but you can see that we are starting to make that move close to that 18 level. So here over the next 2 weeks, if it just kind of hangs out and then starts to roll over, but we see that VIX get below 18, that might be a really good time to possibly pick up some bearish plays. Maybe not go all in, but start to pick up those bearish plays, as option, probably premium would be really low at that point in time. And just expect that you're going to see the grind lower later on. Alrighty, Alpha Hunters, let's talk about what I'm kind of game planning for now. So let's talk about the bullish and bearish case, okay? And if you do see any bulls talk on TV or YouTube or anything like that, one of the things that they talk about, the bulls talk about, this is the bulls narrative right now: lower inflation and Fed pivoting. Those are the things that the bulls are talking about, and that's all they talk about. Now, if you see bears talking on TV or YouTube or anywhere else, or making articles or whatever, the things that they are talking about is a decrease in earnings. Now, the reason why this is important is because most of the time the market focuses on earnings, okay? 2022, I would say, is a little bit more of the anomaly. Most of the time the market does focus on earnings, right? So since in 2022, everybody was focused on inflation and how much the Fed was then raising interest rates. But you got to understand where we are in the marketplace. We have already seen inflation peak. Now, whether or not the Fed pivots, that's not up to us. That's not up to us. The next thing the market, to me, really will start to focus on is earnings. And a lot of people have been saying all this higher interest rate is going to start to put earnings pressure and compression on the bottom line. So we're going to start to see that. Also, we are still seeing wage increases, right? So since we're seeing wage increases, that also hurts margins for companies. So I would expect to see earnings probably coming down, whether it's forecast or just companies not beating earnings. And what was kind of interesting today, and that was what we saw in Friday's trading, right? We saw a very nice gap down and then a push higher, took out Thursday's high. But if you notice something, we did it on really light volume. There wasn't much volume out there. So it is one of those things that it could just be better to be on the sideline than in a choppy market that you don't really know what it's going to do from one day to the next. Okay. Now, if you're a bull, what you're kind of wanting to do is you're probably going to continue higher early next week just because of the way we ended this week. I would expect us to completely do that and then start to make a little bit of a retest lower here over the next couple weeks. Now, you want to retest into some of these levels and then start to push higher later on. And you want us to kind of take a little bit of time. You really want to gain some support, not really have anything drastically moving, but you just want things to settle out and be smooth, baby. You want it to be smooth, okay? And then break out later on. You just want to retest some key levels. Now, if you're trying to be bearish, one of the things that you did notice as we were looking back at that SPX and SP 500 and a lot of that kind of stuff, we're seeing a lot of that move down, but it took a while. It was a very slow grind. And anytime you retest a level, you want to see that bounce that the bulls do off of a level, you want to see get rejected, right? You want to see it get rejected and met with any bullish pops that they're not successful. They don't take out previous highs. You want it to just then break down and go make a new low. And you want bulls to think, okay, we're going to retest this level and then we're going to bounce. Okay, we're going to retest this level and then we're going to bounce. That's what you want to kind of continue to happen as you continue just to push into the bearish direction. So either way the market's going to go. Notice what I have here. Just choppy. Choppy here for the next week, next 2-3 weeks, you know, especially once we get to Fed. Once we get to the Fed, February 1st, you know, maybe the market makes up its mind of which way it's going to go because CPI didn't really make up its mind. It was a choppy day. It was up, it was down, it was down, it was up. Nobody knew which way it was going. So if you want to just be patient and just wait for the market to tell you which way it's going to go, just wait. There's no problem waiting on the sideline. Just protect your capital and let's figure it out later on which way to best position. Now, I'm going to be leaning a little bit more bearish because my longer term approach is we are going to make our move to 3,100. So I'm not going to say I'm going to be right, but I am going to start to be a little bit more protective if we get in and just consolidate sideways before we push higher potentially later on. But the other thing you got to remember is we are in earnings season. So if earnings continue to come in weak every day, day after day, it's going to continue to put pressure on the market to probably just trade in the bearish direction. Okay. So just understand where we are in the marketplace. The bulls are focused on CPI and inflation. Well, we are past inflation. The other thing they're worried about is Fed pivot. The Fed has made no inclinations about pivoting. The bears, they've been talking about earnings and earnings compression, and we are now in earnings season. Inflation's past us. It's now earnings time. We've already seen one gap down, but it was bought up on a super light volume. So if we don't do much next week and we just kind of hang out, trade on a really light volume week, it's going to be a short week next week also. Just remember, Monday is a holiday. The market will not be open. Then we might start to see the market kind of turn around, and it's going to be a slow grind down. It's not going to be no quick whipsaw events until the end. So just realize where we are. You know, it's fine to sit on the sideline for a good chunk of this time period and let the market figure it out. Alrighty, Alpha Funders, have a great weekend. Take care.